happy to be here. I love my job because I get a chance to work with and talk to business owners all the time about opportunities, and sometimes that just varies depending on where you are in your business cycle and where you are as an individual. So today, I want to correspond with the topics. I know some people want to focus on, what do I do for this preparation stage? This really carries over to a lot of different stages where you may be, so beginning business, intermediate, or advanced. Hopefully there's something that I can share that's helpful as you think about, is it time for me to ask for a loan? Is it time for me to sit still? Just things to consider. So Love Merchants Bank because they give me a chance to really focus on, sharing information that's going to be relevant for you all. So today I'll talk about mobile apps. Because I know that sometimes we can get into the pitfall of, having money in too many different places. So as we talk about paying your credit on time, you got to keep up with your money. So this is really the preparation, the administration part of that. Kia mentioned having a business account and why that's important. So we'll talk about that, and then making sure that you're keeping your banking separate. So a lot of popular apps that businesses use are listed here, and there are more. There's so many. So how many of you use some of these apps? How many of you use more than one? More than two? Ooh, more than three. So I am not going to make a statement on which one is better or worse. I would say that sometimes small businesses set up these opportunities for their customers to be able to pay, but you have to really do what helps you to manage your business the best. So as you're thinking about paying your credit on time, as you're thinking about what you need to do behind the scenes, building your personal credit, building your business credit, you have to really consider what helps you keep track of your funds. And if having all these different sources of income are not beneficial to your record keeping, then please make adjustments now before it's time to go to the bank. What we're talking about today is, there are financial steps that you can take along the way. There are partners, CDFIs, banks who can be there for you, but we want to make sure that you're preparing for those conversations. And if you have too much going on administratively, then it's difficult. So Cash App is a popular one. I see this on a site that I'm on Facebook. People are talking about, you can send me the deposit on Cash App. You can do these things on Cash App. And I just want to make sure that you understand that there are different things that are a part of these mobile apps. Cash App is not FDIC insured. So the money that you have sitting in there is not insured. It is helpful for transactions. A lot of times I would really stress, between family members, people those types of things. If you have a service where you're paying a regular amount for that service consistently, then it's easier for your tracking. And when you come to talk to a bank, you can show us exactly what happened between you and a customer, or what happens to you on a monthly basis, because it's always the same. But generally, if you charge $15 for this, $30 for this, and $55 for this, those transactions get lost in things like Cash App. And so the fear is to have a conversation with a bank or another financial institution, and you can't tell us and talk to us about where your money is coming in and where it's going at. So Cash App has personal, it has business. I'm sure you've already done your research on that. As you can see here, I just did a little calculation. Business accounts generally charge a fee on many of your transactions, so you want to keep those in mind. Is this $8? Do I want to keep paying $8 to receive $500? Or what are things that I can do? So conversations with your banks can help you think through how to minimize your administrative challenges so that you're moving forward. Zelle is another one that's a mobile app. So the reason that Zelle, and I'll talk a little bit more about that, is because it doesn't have the same fees, and it's tied directly to your bank account. And you can see the statements and see the transactions in your bank statements. So the challenge with Cash App is things happen in this abyss. Now it says they have statements, but those statements are not the same. It also says that it connects to your accounting software. Okay, well, that's because they want to be your go-to. But I would really caution you about making Cash App your financial go-to, because it's how it's designed on their end, but when you look at it from a business perspective, it's the best for your business. And my concern is what our conversation is going to look like if we depend on things that we can't see see the history. We can't go back over years. We can't trace it back to a specific customer. And Zelle is tied to a bank account, which allows you to do that a little bit easier. And you have to have, establish that relationship, which helps. So, again, not spending a lot of time on that. So, really what I want to talk about is why banking relationships are important. So, who in here is with a bank? More than one bank? More than, credit union is fine, financial institution. More than two? Okay. So, who has a relationship with the person at your bank? Can somebody tell me why that's important? You can blurt it out.
I'll go. For me, starting a new business and not necessarily being comfortable in finances, I'm with a credit union and they really helped me. They really talked me through things. And even when we were talking about loans, I wasn't able to get a loan, but they were able to increase my credit limit on my card and other things as well. So they really kind of helped me and be really honest with me. Like, yeah, you may want this, because I went into business, hearing people talk about business credit and stuff, and I was like, well, what about business credit? And she was like, well, let's really make sure that your personal is fine. And I like the open honestness of my business bankers, and they really kind of helped me to see what products help me in my business.
Absolutely. So I was talking with another group, and someone said that she didn't think that a relationship with the bank was important. Not to say that not having a bank account wasn't important, but she didn't feel that the relationship was important. And so sometimes it could be used interchangeably, or perhaps that's just a personal value that she had. But you're exactly right. Having a relationship, and Kia mentioned it earlier, having conversations and the ability to have conversations makes a difference, because it should help you navigate your situation now so that you're preparing for things as they come down the road. So you're exactly right. If a bank or a financial institution relies heavily on your business credit, then you want to know that in advance. But if they don't rely heavily on your business credit and they rely heavily on your personal credit, you want to know that in advance. So figure out kind of where you might be in a year, why you might be asking for a loan, and what those terms need to be in order for you to move forward with that opportunity. And then look at the requirements for that loan product. And I don't want to keep talking about credit too, because savings is important. But when it comes down to it, you just want to make sure that you understand and focus on the things that are going to matter for you to move forward. And if that credit is something that you need, prepare yourself in advance. And those conversations with a person helps. It can also make sure that you limit or expand your access to your money. So we talked about having more than one account. Sometimes that's helpful and sometimes that's hurtful. So you have to figure out your personality and how much you review your statements, how much you're willing to sit down and spend time on a weekly basis, on a daily basis, to look at the numbers and make sure you know what's going on. If record keeping is a challenge for you, don't overextend yourself. You have to do what's comfortable for you, but also allow a bank to help you set limits so that you don't overspend and so that you don't commingle and so that you don't do things that are detrimental to your account and to you as a business owner. So you want to make sure that your financial institution is working on your behalf. Other services is kind of a given. I would also say that relationships matter, because if you're not a great fit for Merchants Bank, we will not just send you away and just say, oh, we're so sorry, it's not going to work out. Like, our goal and my goal is to make sure that our conversation is to understand who you are, what your business is, your history, and where you're trying to go. Some people want to remain, in a part-time status and work full-time and do their business part-time. Some people want to do their business full-time and they want to transition to that, or they want to scale up and they want to grow. So it's helpful for us to know. If we have to say no, then I should be able to, or your bank or your institution should be able to, I'm sorry. Let me get back here where I'm supposed to be. Right? Your financial institution should be able to make introductions to you so that you can still get where you need to go. So it's kind of difficult, because I feel like sometimes we're quick to do things online to try to knock it off of our to-do list. And sometimes when you do that, you don't get all the answers that you need. So you might want to start the process, or you might want to click through and see what those requirements are. But feel free to call during business hours and get more information so that you're really doing what you need to do. So I would say that, that relationship matters, and the ability to call somebody matters, because you should be able to get introductions to resources, workshops, people who are really here for you and for us when it comes to navigating barriers and obstacles. So I'd say that's really important. So bank accounts. I'm not saying that you have to have so many, like I don't know what the magic number is for you, but one of the suggestions is to really figure out how to structure your accounts when you set your bank accounts up. So you have to have personal. So everybody has a personal and a business, right? Okay, thank you. Like that is so heartbreaking. Can somebody tell me why you don't want them together? Yes, yes, yes. So something happens, an emergency, we talked about it earlier, maintenance on the car, something happens. You just got paid on an invoice and now you have $2,000 in your account. Let me go ahead and take care of this and then I'll get back to that's not going to help you overall. So you have to figure out how to do your management on the back end. So when those situations happen, you can see exactly how much money you have to deal with those emergencies and those opportunities. So there are some sources that say that you should have an operating account, and that's what you're saying is that you have an operating account, and that's the one that you're doing your daily business in and out of, and that's where you're paying your bills, and all of those things are coming in and going out. The suggestion could be that you could set up a tax account. So the tax account is so that you're saving in advance, and we talked about that, anticipating, saving in advance for your taxes and making sure that you have that when that time comes. Because when you wait, what does it do? It takes away from your operating account. It takes away from the things that you see like, oh, I needed that money to do X, Y, Z, and now I got to pay my taxes. You knew Uncle Sam was here before you started your business. You knew he was going to be knocking on your door like afterwards. So it's not really a surprise, but you have to be prepared. And then a suggestion, if you want and if you decide to have three business accounts, then one is for profit and one is how you calculate, how you move your money so that you're not keeping that in your operating account. You can actually see your progress and see yourself moving forward. It also allows you to plan. So one thing could be, some people said they have more than one bank account. It could be bank 1, bank 2, and bank 3. I'm going to put it here because I don't have access to it as quickly as I want to, and so I know it's going to be easy, it's going to be harder for me to get to it. That's going to allow me to really keep my hands off of it. Or it could be one bank, one financial institution, so it could be a bank or a credit union, and then it's in one place, but then you have this account is for this, you have a savings account for your taxes, and then you have a savings account for your profit. So it's up to you how you set that up, and again, you have to do your management based on your personality style and your likelihood to be consistent, because that's what's important, but those are just suggestions. Yes, ma'am.
And Marquisha, would you say that the benefit of having it all in one place, if you're disciplined and cannot, mess around, is because then when that business banker pulls up your accounts, they can see that full relationship that you have, and it might make them look at you a little differently or hold you in perhaps a higher regard when it comes to recommending products or being willing to do some things for you that they don't necessarily have to do?
So that's one thing, but because, yes, absolutely. I would also say that technology and the ability to see and pull up electronic statements, which is the reason I said to stay away from Cash App and to really utilize a bank. So even if you had to show those financial transactions on a statement, if it's with another bank, we don't frown because you're with another bank. It's really your ability to show your history and how quickly you can access that information. So yes, we could easily see if we went into the system, if they're with the same bank, but if strategically it makes sense for you to have them in different places, then you have to go with that strategy as long as you're consistent and you can follow your own paper trail and make sure that that paper trail leads you to where you're trying to go. So for us, right now, our return, our interest rate on our savings money markets is 5%. Okay, well, you can either have it somewhere that's not earning interest or you can have it somewhere that is earning interest. But that still doesn't affect your operating account because that's your checking account. I have multiple accounts. I like this bank that they're blue. I'm not going to say their name. But but I've been with them for a long time, and my retail accounts are tied to them. So when I pull it up, I can see my credit card like I can see this statement and see all the information there and pay it directly from my account. So for me, it makes sense to keep it. It also allows me to see my credit score. I mean, all mobile apps have it, but I just utilize it in this particular app. So then I can see if something gets added to my credit cards and if something gets added to a statement that I didn't anticipate and hurry up and pay it. Because now, all of our credit card statements are electronic. So if something happens, if you forget about a fee or if you forget about something, like that process of monitoring your accounts, whatever works, make it work and make it happen on a consistent basis. So long response, it doesn't have to be, you just have to do what works. And sometimes it's easier for us to see that, but it's not a ding against you when a bank can't see everything, as long as you can provide everything, which is the challenge when you're using more than 1, 2, or 3 mobile apps. You know what I mean? So your money can get lost. Your money, it's easy to kind of lose track of that stuff. Okay, so then setting up accounts. This is just a quick reminder to make sure that you have the checking account or the banking account product that works best for you, okay? So getting in the hustle and bustle, and somebody said, we do things in different stages. We do things in different times. People have a bad taste in their mouth sometimes when it comes to a bank because of something that happened in the past. Those rules were already there. If we missed it, we can't be mad at the bank, right? So if you missed the fine print or something, it's not really a ding against the bank. It was just something that was going on in your life and it got past you and that made you feel a way. That's not against the bank, and that's not a reason to have a banking relationship. It's not a reason for us not to keep talking about that with our family and our friends, because that's important. But anyway, you got to pay attention. If you had a number of transactions when you first started your bank account, and say your business said, I'm going to pop-up shops and I'm going to these community events, and so I have 150 transactions a month, easy. Okay, well that's fine. But then now, 7 months down the road, if you no longer have those number of transactions, and that's one of the stipulations for you to have a free account, then that's something that you need to adjust. It's another reason that the relationship with the banker comes into play, because you need to make sure that you're staying on top of that. It's not their responsibility to look for that for you, but it's your opportunity to have a relationship and just say, hey, I just want to make sure I'm still in the right product. I noticed that I got charged a fee the last 2 months, and I think it's because something shifted in the way that I do my banking. So the number of transactions matters. Deposits counts as transactions, but that's never counted against you. It's really those other movements. Some banks, it's free if you tie it to an accounting software, and some accounts it's not free. Some have transactions fees. So if you accept money electronically, sometimes those banks have transactions fees. Overdraft, we already know about that. Automatic clearinghouse, I would say this. So sometimes we assume that people have to pay with a credit card. So that means if you're waiting on an invoice and you want that payment, you're sending them a link to say, hey, you can pay this way and use your credit card to pay me. But if you incur a fee doing that, then you should talk to your bank and see what are ACH opportunities so that it's paid for through the automatic clearinghouse. So it's just different ways to avoid the fees, but still receive your payments. But those are things that you want to make sure that are part of your bank account package so that you're maximizing your relationship and maximizing your accounts. And sometimes I hit it in a magic place and sometimes I don't. Okay, so what happens when you're ready for some money? What are we going to ask for? And I was in another workshop and people were saying, not necessarily wanting a loan. I just want some grant opportunities. Grant opportunities still require the same level of management. They require sometimes more on a regular basis. Sometimes in the form of administration and what they're requiring for documentation. So a grant oftentimes is not any easier than requesting a loan. And I will say that I just submitted some grant applications for a partner that we have, and some small businesses wanted to take advantage of that. It still asks all these questions. So you still have to prepare your documents to understand what your business purpose and all that stuff is in this moment of time. You've done all your research. If it's changed, you have to update that. They look at all of that, and we look at that. If you're applying for a, I think I'm boring somebody, but I won't call them out. But anyway, if you're applying for a loan, I'll make it fast, right? I'll make it fast. If you're applying for a loan, we're gonna ask to see, when's the last time you double checked on your cash flow, so that we can see that you're gonna be able to pay that loan off. It's the same with the grant. How are you managing your money? These funds are not intended to bail you out. I'm gonna say it again. These funds, grant or loan, are not intended to bail you out. They are intended to take you to the next level. If you cannot manage what you had, or things aren't going well based on your current business plan, it's a time to reset, and that's okay. But it's not really to take you out of that situation so that it can happen again. It's to take you to the next level. And if you are in trouble and there's a loan that's applicable with a CDFI or another institution where it can say, hey, you messed up, here's what we can do, that's great, but keep that in mind that that's rare. So your financial statements, we're still going to ask for that. We're going to ask you to see, your balance sheet. We're going to ask you to see your year-to-date. We want to know what a snapshot looks like, and we want to know what long-term looks like. So set up your accounting statements now. Somebody asked, if you're not comfortable with something, should you have somebody else do it? Absolutely, you can have somebody else do your accounting, but you should understand what they are doing for you. And you should understand the statements that they're providing, the services that they're providing, and what you'll need when you request a loan, so that you get that done in advance. So that you don't have to go back and say, oh, I didn't realize I wasn't having these financial statements done over time, so that you know that you're getting what you need. Collateral, we talked about that, and credit worthiness. That's why we're here, just to make sure that we are all where we need to be. It all comes into play. It's something that we look at. Industry trends. So understand your industry. We're going to have a conversation, and it doesn't matter how we ask the question, we're going to ask the question, even if we slip it in. We're going to ask you about your competition, and we're going to ask you about where you fit into the market. And why do you think this is so great when there are already so many other things that exist? And why did you come up with this plan, and what problem are you solving? And what's your long-term goal, and why does it matter in the long-term piece of the puzzle? So we're going to ask you that. Your management team. You don't have to be dressed in suit and tie. And sometimes that's I got to come a certain way. But you should come a certain way. Like you should come a certain way, ready for the conversation, but don't come where you're not comfortable. Like, be comfortable. How you're dressed for your workshop, just be comfortable. But if you have somebody on your management team that doesn't understand that, talk to them before, because that's all part of your time with your bank. That's all part of the consideration. We're looking at who we're talking to. And if 2 people out of a 3-person team haven't filed their taxes, you need to know that before you walk into a bank or any institution. So always understand where your management team stands, the people that you have on your team, where they stand, and make sure they represent you, and make sure that they're just as ready to do what they need to do as you are. Because I had to decline 2 loans, and they were cash secured, which means that there was cash that existed, but they hadn't filed their taxes. So it says, you want us to trust you with this money, but you can't give us a good reason. And we were willing to take a good reason. Like, it had to be a really, 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 really good reason. Really to take the good reason, but you have to be able to tell us why. Was it illness? Was it, something happened? Was it a family emergency? Like, what happened? If it's just that you hadn't gotten around to it, like, we can't extend money on that reason. That's not, that doesn't, and you don't want that to be a representation of your business. So make sure your management team is on top. Honesty and transparency, we talked about that. If you feel like something's awry, or you're not where you need to be, or something's happened, be honest and open. Don't wait for us to find it. Just say, hey, you're going to see something in 2021. Let me just tell you now. Have that conversation. Okay, and then, I always just hit it wherever. Here we go. So, to wrap up, your financial goals and your business goals really, to me, are kind of one and the same. So you want to be realistic, definitely be realistic. If I can say it again, just be realistic. Don't overpromise, just like you wouldn't overpromise where you are in your business. If somebody says, I need 20, but you can only do 10, be honest that you can only do 10. If you want a loan for us and you know that the repayment is, it's going to be a struggle, let's not talk about what pie in the sky. Let's talk about where you are and how we can make that happen. We talk about wants versus needs. Make sure that you're spending and getting what you really have to have, depending on where you are in your business. I heard somebody say that they were spending a lot of money on their swag. Your business just got started. You probably don't need to worry about swag. Just worry about your business model. People are going to remember you because of their interaction with you. Don't go into debt, or don't go for debt, so that you can provide that leave behind, because that's not really what your business is about. So just make sure that you're intact with what you need and what you want. Have milestones for where you want to be in your business, and that's what the conversations with are about. Control your spending. I talked about a consistent process, and planning ahead.
Marquisha,
Oh,
go
I'm
back to
sorry.
that one.
Maybe.
Maybe backspace button?
Maybe. There we go.
Thank you, I got it.
Okay. So what questions? I think I have like 30 seconds. And then it's time for y'all to eat, so sorry.
I just have a question. So since Square is now the owners of Cash App, have you all taken that into consideration? The only reason being that I have multiples because I do a lot of vending. And for instance, a few weeks back, Square went down, Cash App went down, and I was in the middle of sales. And so if I had not had Apple Pay or Zelle, then
So that's a point of sale. Those are point of sale. So Apple, that's really like if you're at a community fair or you're at something, you have to have those point of sale opportunities. So that's fine. All I'm saying is have a way to manage all those different streams for money. So absolutely, you just want to make sure that you're safeguarded.
my question is that being, because I think they just bought it, they've had it for a little while. Is that being considered into the whole scheme of things? Because Square seems to be going in a direction to where they're more becoming like being able opportunities to give people money, like loans and stuff too. And so Cash App is like some of their, like, you can tie it, like I can get, I don't know how to explain it.
So all I would say, and I can't tell you not, I don't want to tell you not to do something, but just read the fine print, because I just was talking to a group, all money ain't good money. And so you just have to figure out kind of the incentive and their why. And if it's truly going to move you forward and it's short term, you've read all the terms, you can even sit down with somebody and say, okay, now did I miss something? Then just make sure that it makes sense for you. It's just hard to answer like a blanket statement. Some of those things are emergency. However, they don't know you, and I'm not going to say they don't have your best interest at heart, but you're just another transaction. So I would just want you to make sure that you looked through it with somebody who has your heart and your business in mind, so that you make the right decision. So it could be good. It might help with a really quick solution, but I would be concerned. I'm always concerned with some of those lending entities, because usually the percentage is kind of tricky, and then there's a window. Even with your credit cards, if I could say this real quick. With the credit cards, you know how they say if you transfer your balance, then, transfer your balance and then you can still use the card, but, this balance is at, a lower interest rate or 2%. This is going to be at 22%. So then you're like, oh, well, I'm going to transfer this balance so I can take advantage of the 2%. Just make sure you understand what that repayment looks like. Because if your repayment only goes to that 2% and then you don't pay that off by the end, you end up like, it's not for you. They do it in a way so that the money goes towards your higher percentage, because they don't want you to pay that off. So you always just want to make sure you look at the fine print for those loan and those credit opportunities.